Duolingo has been by far one of the most requested stocks on the channel. Many investors are saying that it's going to disrupt the education industry. This is over 5, 6, $700 billion total addressable market. The company is only $16 billion market cap, so it has very long runways. The stock was up like 30% into earning, then it sold off. So I'm going to give you my opinion on Duolingo if I'm seeing some kind of major potential. I've invested in a lot of growth stocks in my investment career. I bought Hims and Hers, I bought Robinhood, I bought many of them early on, and I'm gonna discuss Duolingo, let you know if I'm seeing the potential here, or maybe Duolingo is some kind of a hyped up story that's gonna hit some kind of a growth wall, and the growth is maybe unsustainable and is going much lower. So I really hope you enjoy it as always. Now, Duolingo's report was absolutely stunning. They grew revenues 41% year on year, total booking 41%, net income 84% year on year, EBITDA margin was 31% year on year. It was an amazing report, and the stock was up like 34% into the report, and it was amazing from Duolingo. Now, Duolingo makes money in two main ways. The first way they make money is they convert their monthly active users, which are 128 million people on the platform. They try to convert them into paid users, and they try to sell them the subscription to learn a new language. Maybe it's Spanish, maybe it's Russian, maybe it's some kind of a new language, Arabic or whatever, Chinese, and they try to convert them into paying members. Now, out of the 128 million users on Duolingo, only 10.9 million are actually paid members. The rest are just free members. They use the platform every month, but they don't pay a subscription. So the conversion rate for Duolingo is actually very small. Some people say it's because of attention span, because Duolingo is more of a game than it's actually like school, like learning something or learning a language. So sometimes it could be very good and it could make it easier for people to learn. But for other people, it could make it a distraction where they don't actually take it seriously. And that could be a major problem for Duolingo, but the conversion rate has actually been going up over time. So they used to convert 3.3% of the monthly active users into paying subscribers. Now it's around 8.5%. So they've been working in a lot of feature for them to be able to increase the conversion rate from free members into paid members. And the company is very innovative, and they're doing something right. And someone has actually sent me a report, and this is a report of the churn rate of Duolingo, which they actually don't publish, but there was a report on that from a research company back in 2023. This is the latest data that I have, and it compares Duolingo to Babbel, Brainly, and Simply Piano, which all of those are pretty similar in terms of business model. The churn rate for Duolingo was 28%, much lower than Babbel, which is a second competitor at 58% churn rate. Brainly was 35, Simply Piano 64. Now 28 for Duolingo is much better than the competition, but it's still extremely high. And eventually the company is going to hit some kind of a growth wall where they can only get so many free members and they can convert only so many of those into paid subscribers. And they're eventually going to hit a growth wall, and they're going to get some kind of a Celsius treatment where they just decline in growth. But I believe this phase is coming, but it's not coming before the next 5 to 10 years. And I'm going to tell you why. So I believe Duolingo still has a long runways before they hit the growth wall, but they're eventually going to hit it. This is not Amazon Prime. This is not Costco. They're eventually going to hit the growth wall. But those free members are not just sitting there for free. Duolingo is monetizing them through advertisement revenue. And they advertise a lot of things to them, and they collect ad revenues around 20 million a quarter. And the ad revenue for Duolingo has been growing 30% CAGR. So those free members are not just sitting there for free. They're also being exposed to ads, which is collecting ad revenue for Duolingo, and they're doing really well on that. Now, for Duolingo to diversify away from only learning languages and for them to not hit the growth wall, the one I described anytime soon, they're trying to diversify into becoming more of an education platform, not just for languages, but for other courses and other kind of things that you want to learn through one simple app. And they recently announced some kind of a chess course, which has grown faster than any other subject we've launched, including language learning. It was growing very rapidly, with over 1 million daily active users as of a quarter end, and that's just on iOS and in English. We plan to expand the chess course to Android and more UI languages throughout this year. We have an exciting product roadmap, including better content for intermediate learners and the ability to engage in matches against others. So the company is trying to develop itself into more of an educational platform. You can learn games, you can learn music, you could learn a lot of things that maybe you could learn in school, you could learn them on your phone. And this is gonna be beautiful. And the TAM, again, we're talking about hundreds of billions of dollars in total addressable market. The company is only 16 billion market cap. So the runways is much longer than expected. People told me, Duolingo is gonna hit the growth wall. I believe they will, but it's not going to happen before 5 to 10 years. So I believe the company still has very long runways before they hit some kind of a growth wall. Now, if we analyze the income statement is very, very interesting. And the company has been showing up some operating leverage. But something that I have to show you is if you look at the research and development, which what the company spends on them to grow and come up with the new products and innovate, they increased research and development by almost about 15 million. A little bit more actually, around 18 million in research and development. Okay, but even though they increased research and development by 18 million, net income has almost doubled. Now let's assume they did not increase research and development by 50 million, and they instead used it to pretty much just kept it to the net income. So if they did not increase it by 18 million and they just kept it the same for research and development, net income would go up 50%. So net income would go from 44 million to like 60 million overnight. So if the company really wanted to become profitable, they can become much more profitable today. But they're not being profitable by choice because they are reinvesting in themselves for them to grow over the long term, for them to come up with new courses, for them to innovate the platform, for them to have much longer runways than a lot of people believe. So it's not much about profitability with this one. Profitability is important, but the company is not as profitable as they can be by choice because they are reinvesting in themselves and they can pull back this investment anytime. And this is a beautiful part about Duolingo. Now, I have to mention that a lot of their net income, almost 20%, is coming from interest income. So from cash on the balance sheet collecting interest, but it's still legit. It's not a scam. I mean, it's out there, but it's not from core, like income before interest, which income before interest did double, but this is still 11 million, not from the core business, but it's from interest income. But the company, even though they're reinvesting in themselves, they still have around 31% net income margin. So if they really wanted to become profitable, they can have like Visa kind of net income margin of 40-50%. So the company could be extremely, extremely profitable if they wanted to, but they're not too profitable by choice because they are choosing to reinvest in themselves. I spoke about the balance sheet. The company has around 1.1 billion in cash and cash equivalent and pretty much no debt other than lease liabilities and tax liabilities, but pretty much no long-term debt. So the balance sheet is very, very clean. Now, if we look at the PE ratio, the company is trading at 50 times forward earnings. Now, this is important because this is non-GAAP forward earnings. So the company is trading at 50 times forward non-GAAP earnings. And the reason why this is so important is because Duolingo has massive stock-based compensation. So this 50 times is calculated by taking $6.64, which is non-GAAP or normalized on stock-based compensation. If we want to adjust for stock-based compensation, the real earnings per share on GAAP basis would be $3.35, which means Duolingo is trading at 100 times earnings. But Duolingo is really not alone in this. AMD is doing the same thing. NVIDIA has a lot of stock-based compensation. Most of those tech stocks have a lot of stock-based compensation, and at least Duolingo has been growing out of it. So stock-based compensation has increased, but profitability has been increasing also. As you can see here, net income used to be negative, stock-based compensation was growing, and now, for the first time ever, net income has actually exceeded stock-based compensation on a quarterly basis. So the company is growing out of it. It's not going to be a money-burning machine and share dilution forever. They're not even diluting that much anymore. So things are improving, but they're trading at 50 times non-GAAP earnings, which is something very important, and it's something that's worth mentioning. If I look at the growth of the company, they grew 78% in earnings in 2024. This year, they're expected to grow 61% in earnings per share in 2025. Next year, they're expected to grow 25% and 28%. I think this is fair. I don't think the company is going to grow 61% forever. And I think you guys can agree with me is that putting 61% growth numbers is a little bit too optimistic. But I believe a jump from 61% to 25% growth is a little bit too pessimistic. So this is what I did with my numbers. I took the current 2025 estimate of 67% growth. Then I took it to 30%, assuming some growth contraction, which companies contract in growth over time. They don't grow the same forever. Then 25%, 25%, 20%, 20%. I believe this is fair. And I haven't really spoken about AI because some people said that ChatGPT could potentially kill the business model of Duolingo, but I don't believe this is going to happen. I believe both of them can coexist as people like to engage with Duolingo and I use ChatGPT for other things as it's not just a learning platform. It could be possible over the future, but this is why we're taking the growth rate down. We're not keeping it at 60% forever and 30% because more competition will likely come in with the innovation of AI. Okay, and we take it from 67, 30, 25, 25, 20, 20. I think this is more than fair, and I think you can agree with me. Okay, now if the growth contracts from 67 to 20 by 2030, the multiple has to contract also, and it could go from 50 times to 30 times, and it could even go to 25 times but Duolingo is so profitable that I'm keeping it at 30 times. I think 30 times could potentially be fair. Now, even if I use 30 times earnings with all those numbers, I'm getting 57% on the upside or 9.5 CAGR over the next 5 years. And in this case, if I want to get it double over the next 5 years with Duolingo, I would have to buy the stock at $291 per share or negative 21% from today's price. Now, if the multiple stayed the same at 50 times earnings, which I highly doubt it, then Duolingo is a buy here, and it could return 21% CAGR or 162% on the upside. Now, I'm going to be honest with you guys. Duolingo, to me, is overvalued on traditional metrics. Like I look at it and I value it on an earnings per share basis and on growth and everything. But the company has been really surprising to the upside. So it was expected to grow like 40% this year, they're going to grow 67%. Next year, they're expected to grow 28%. They can put up 40% growth. So all those numbers that I'm putting up could potentially be wrong. And Duolingo, to me, is more of a futuristic bet than trying to value it like I'm valuing FICO or like I'm valuing something like Apple or Amazon. So for me personally, for Duolingo, and I'm thinking about it potentially, I might like open a small position, like 1-2% of my portfolio and see what happens. If the company keeps beating on earnings, they grow into the overvaluation, then I add more to the stock. But I believe in principle, Duolingo is expensive. This is why the stock sold off after earnings. It just could not maintain the multiple that it was putting up. It was too expensive, around 14 times forward sales, 50 times earnings. So for me, the sweet spot around Duolingo to open a large position would be around $290, $300 per share. This is reasonable. But if I'm betting on Duolingo being a disruptor in education, and education is a $500-600 billion TAM, and it's only 15-16 billion, then this 10-20% difference is not going to matter. And I learned this lesson before with skipping growth stocks because they were 15% expensive, and the truth is the TAM was so large that it didn't really matter. So for me, I think Duolingo is worth a speculative bet, like a small position. If the company prove itself, I would add more to the position. But if you're very conservative, if you don't want to lose money, if you don't want to take the risk, I would say $290 to $85 per share is a sweet spot on Duolingo. But I like the story, I like the platform. I see a difference between Duolingo and Babbel and other ones. And I don't believe ChatGPT will kill Duolingo. I think both can coexist. And that's my opinion on Duolingo. Not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.